I would like to ask the Minister for Finance that despite Singapore's status as one of the most prosperous countries in the world, why is Singapore paying lower interest rates on the forced savings accounts in contrast to counterparts like Malaysia and India?
Minister of Finance.
Mr. Speaker, I would like to start by first thanking the member for his question and for giving me this opportunity to clarify about the CPF. Mr. Speaker, I would first like to get a point in the House. All interest rates that you see in the market are pegged to the risk-free rate of the central bank. This is with regards to the 3-month TU rate. Every country has a different risk-free rate, and you cannot simply take two different interest rates and compare them across different countries. The differences in rates across countries reflect future movements in currencies as well as the central bank's policy with regards to monetary issuance. Right? And if you were to consider the return that we provide on our CPF, you have to look at the spread in which we provide above the risk rate. And the spread in which Singapore is providing for its ordinary account and special account are 2.25 and 3.75% respectively. So this is much higher than our counterparts in Malaysia and India, right, which are giving 2% and 1% respectively. With this, I thank the member for his question and his concern for pensioners.
Thank you, Minister of Finance. Mr. Marcus Kok.
Thank you, Mr. Speaker. I'll ask this question on behalf of our member, Marcus Kok. I would like to ask the Minister for Finance what is the extent of losses, paper or realized, suffered by Government of Singapore Investment Corporation, GIC, and Temasek Holding arising from the financial meltdown in the United States and Europe in the past few years and the related events worldwide. What are the measures put in place to minimize such losses? Thank you.
Minister of Finance.
I would like to start by thanking the member for his question. I'm disappointed by the fact that he is asking about information that is already published on GIC and Temasek website. Temasek Holdings entered the crisis with a portfolio of $185 million in 2008. I'm proud to announce that Temasek assets lost at $193 billion. This is not including the amount of returns that Temasek Holdings gives out to its bondholders and shareholders, including the Singaporean government. I'm also proud to announce that this performance that Temasek shows outperforms all other market averages, and I believe that the whole House will join me in paying compliments to the management team of Temasek Holdings. As for the case of GIC, it has achieved an annual compounded geometric rate return of 6.3%. This is based on the past 5 average past 5-year rate. It is unfortunate that I cannot divulge the quantum of funds in GIC because of the nature of national security with regards to the sovereignty of monetary policies. I seek the House understanding for it. As for the measures to minimize losses in the future, I point out that both portfolios are highly diversified, but cannot remain immune to global macroeconomic fluctuations. It rests assured that investment strategies that are present are sound, they are actually endorsed by Berkshire Hathaway. Alright? So there should be no permanent reductions in the value. There will only be minimal losses due to static fluctuations. So any further diversification that we see in either of Alright.
Yes.
Any further diversification that we see in both of these portfolios will not result in much minimization of losses, much minimization of risk. But what we will actually observe in both portfolios is that the sovereign wealth funds will not be able to bargain for discounted assets in the future.
Yes. It has been brought to my attention that there are problems with audibility, and therefore I implore all members to use the microphones wherever available. And because it has been also brought to my attention that the time limit of 90 seconds is too prohibitive, and therefore would anyone be supportive of a motion to extend the time limit to a more reasonable level? Very well. We'll therefore suspend the time limit for speeches. Members, in the benefit of all other members, you may slow down and deliver your speeches audibly. Finance Minister, please continue.
Alright. I'll just repeat my last point on the measures that we have taken to minimize losses and future measures to minimize losses. Both portfolios are highly diversified. Any further diversification will not still be able to minimize any macroeconomic risks that both portfolios will have to be exposed to. At the end of the day, the market rewards for systematic and sound risk-taking, and both portfolios have got adequate exposures, and that if we were to choose further diversification, the amount of gain that we get from this reduction will be minimal, but instead we will be sacrificing the ability of both sovereign wealth funds to purchase assets from the market at discounted prices because of the sheer purchasing power that they have. With this, I thank the member for his question.
Thank you, Finance Minister. Mr. Sherman Ong.
Thank you, Mr. Speaker, sir. I'm asking the Minister of Finance that by one of your proposed measure in the budget is to vary the level of deposit according to the bank's risk profile and creating a separate risk assessment agency to assess the amount of insurance deposit they have to put in. We would like to submit that this actually risks distorting the true picture and this tinkers with a system that's already working well. Under the Deposit Insurance and Policy Owners Protection Scheme, Deposit Insurance Regulations 2011, Regulations 5, the amount of deposit insurance is already determined by the type of assets the bank owns. Okay, instead, and this necessarily means that the amount of deposit insurance already factors in the bank risk profile. Why not leave it as it is? Secondly, a stimulus in...
Yes, Finance Minister.
Mr. Speaker, I would like the opportunity to first answer that question before allowing the shadow minister to move on.
I'll rule that out of order. I'll let the member answer the question first. Raise the question first.
Okay. Secondly, the government proposes a stimulus in the form of a cut in consumption tax. Let's not make any illusions about it. It is a $2 billion stimulus. And with to make up for the expected drop in exports in the coming recession. However, given that Singapore is a highly open economy with a low multiplier, much of this stimulus is expected to flow out of the country. And it is worth, we want to ask the government, is it worth taking a risk, $2 billion, to reduce the consumption tax as it still impacts the lower economic strata of the economy, and we spend our reserves. I'd like to remind the government, under Article 144 of the Constitution, we have to keep 50% of investment returns. Do you have 50% of the investment returns to pay for this $2 billion deficit? Thirdly, we are expected to have savings in the following fiscal year, 2013, okay, with higher corporate income taxes. However, we would like to say that this actually causes investors to avoid Singapore and hinder our competitiveness, especially vis-a-vis other financial centers such as Hong Kong or Shanghai. And we would like to implore the government to reconsider this stand, okay, supposing the expected savings from increased corporate and income taxes. Because if they do not materialize, plus the recession, will cause our economy to hit with a double whammy. And last part, we are encouraging the public in the budget to invest in corporate bonds. And this will result in a corporate bond market according to the way that we see it. Because normal retail mom and pop, retail investors in bonds will actually be tempted to invest the hard-earned money that they may have gotten over 20 years of working, okay, in these bonds. And if the global economy enters a prolonged recession as expected by the government, such corporate bonds will get lower returns and some of them may even be default. And in this case, who is going to help these mom and pop retail investors? And we'd like to submit that this is creating an overheated bond market, and our population can hardly afford to stomach those risks. If we need an example, just look at the collateral debt obligations market in US circa 2008 and 2009. If the objective of the government, right, is to ensure that the companies have ready access to a reasonable amount of credit, why not take steps to ensure that banks don't freeze it instead of getting the credit from our poor working population who may not be able to stomach the risk as well as the banks do? Thank you.
Finance Minister.
Mr. Speaker, due to the length of the Shadow Minister's question, I will request that the House will provide me with some patience before I clarify onto the questions that he asked. So in clarification to the Minister's question, we will not be creating a separate agency, but we will simply be amending the insurance level of deposits according to assessment by the MAS. This monitoring is already part of the MAS primary mandate. Unfortunately also, the Shadow Minister is wrong about the status quo with regards to the depositor insurance. The status quo provides for equal insurance across all depositories, and it does not differentiate depositories with regards to the assets that they hold. The current regulation does not allow depositories to hold certain riskier assets such as derivatives and off-balance sheet items, but it does not differentiate them according to what they actually hold with regards to the assets that they are allowed to hold. Alright? So this information is available on SDIC's website, and I implore the Shadow Minister to actually take a look at it. The legislature is also with me, and I can submit it to him for examination. Our status quo also allows us to provide for large deposit insurance because of strict regulations by the MAS. On top of what regulations demand, our local banks also provide excess security for depositors by carrying additional capital and holding higher reserve ratio. This opportunity cost, which they incur, provides safer deposits, and it deserves the government to help by signaling to the public our willingness to provide greater insurance. The figure in which that we are willing to insure will be a strong public statement, and the public should be able to choose which are the safer deposits-free institutions that they will choose to bank with. On the issue of economic stimulus, I'd first like to point out that any form of fiscal stimulus are all subject to the same low multiplier. So is the Shadow Minister actually implying that we are not supposed to stimulate the economy, or is he implying that we should stimulate the economy? That is a question that he has to address. It is precisely because of the fact that Singapore has a low multiplier that we are targeting the GST, because GST itself is factored into the multiplier. On the issue of the $2 billion deficit that is a product of conservative estimates, we have not factored into our investment return yet. In the worst year in 2008, our investment returns total up to $4 billion. With this deficit of $2 billion, I believe it should be covered. It should be something that our returns are able to cover. I will address that more in the supply bill later, and I would urge all members of the House to show patience on this issue. The questions that the Shadow Minister raises on future tax policies will also be addressed during the supply bill. The final question that the Shadow Minister poses shows that he's absolutely out of touch with the local bond market. It also shows that the Shadow Minister has no understanding of debt instruments and how local bond markets differ from collateralized debt instruments. For the benefit of the Shadow Minister, I shall be issuing a ministerial statement later explaining the causes of the 2008 crisis, and I shall also be issuing, within the same statement, the explanation of the 2010 sovereign debt crisis to bring the whole House to a common understanding of the economic situation that we face. Mr. Speaker, I would also like to point out that with regards to the growing of our debt market, there are 3 points that the Shadow Minister would have to note. First, all issuance of securities that are publicly traded. Unfortunately, CDOs, which we compare our corporate bonds to, are not publicly traded assets. All publicly traded assets are to be regulated by a private institution, our SGX, our Singapore Exchange, and the MAS, which is a government institution. Comparing debt and equity of the same company, this would be on my second point, debt instruments actually offer greater security to the public because payments due to debt are issued before payments due to equity. This would mean that in the case of a default, the equity holders would tend to lose more value than debt holders. Finally, in the event of a price bubble, which should not occur for corporate debt instruments, it is not likely because debt should not be able to sell for more than the sum of principal and interest, and this is before accounting for any discount for delay in recipient of payment. Alright, so effectively, debt instruments has a ceiling to the price in which they can get, unlike equity instruments which are already publicly traded by the pubs and mums that the Shadow Minister are concerned about. And that for equity instruments, there will be no price limit. So with regards to this, is the Shadow Minister implying that we should stop all exchanges on the stock market? We should stop the housing secondary market because there is also a tendency for price bubbles to happen? And is he suggesting also that we stop all trading of commodities in the supermarkets because prices in the supermarkets are also subject to price bubbles? With this, I would hope that members of the House would have patience with me later on during ministerial statement because there will be more technical explanation for the privilege of the Shadow Minister later. Thank you.
Thank you, Minister of Finance.